Peloton CEO John Foley stepping down will become executive chair. It's according to a report in the Wall Street Journal that said the company plans to cut costs and overhaul its board. The company has hired Barry McCarthy to be its new CEO. He served as CFO of Netflix for 8 years before taking the CFO job at Spotify, where he pioneered the direct listing route that Spotify used to go public. McCarthy will join Peloton's board. The Journal is saying the Peloton will cut roughly 2,800 jobs as part of all this, and that's about 20% of its corporate positions. The cuts won't affect Peloton's instructor roster or content. The company also dropping plans for a new factory in Ohio. And we're going to get straight to some reaction to this news because we've been talking about the prospects for Peloton for the past several weeks as we've seen a real downdraft on those shares. Dan Ives jumping in this morning to talk to us, senior equity research analyst at Wedbush Securities. An interesting move, but does it change the game?
I think it clears the decks for a sale. I mean, Foley was really one of the biggest impediments given the supermajority on the B shares, and I think really viewed by the street as one of the impediments to a potential sale. With him gone, and obviously a black eye way to sort of end his chapter, I mean, I think there's going to be more and more pressure for this company to sell, especially with Foley gone. He was the pioneer, the core DNA of course, that rise and fall.
Dan, I don't disagree that this may portend a sale, but it doesn't change the dynamic around John Foley. From what I understand, doesn't change the dynamic around the class structure. He's still going to be the executive chair. If you think he was an impediment to a sale before, why does he not remain one?
That's a great question. I think because when he was running it, it was really, if he stayed as CEO, it was really sort of ultimately a sign that he felt like he could turn this around. He could turn the ship around. Some dark days ahead, had confidence. Him leaving, whether it's board or or self sort of move, I mean, I think this sends a signal that he can do it. And he's really been the pioneer. He's been the pilot on the plane. So with Foley's stage left, they could bring in anyone. To me, it indicates that they're going to have to ultimately sell here with some growth challenges ahead.
So you think there's no possibility that Barry is there to actually run the company, to operate the company and run it into the future, rather than run it into a sale?
He could obviously run it in the near term. But in terms of whatever the spin is tonight and whatever they'll talk about, I think the reality is that this paints a picture that the growth challenges are even stronger in terms of headwinds than they expected. Foley can lead, and there's going to be more and more pressure for them to sell. Otherwise, we could watch a 2-minute documentary on GoPro and Fitbit to see where this goes.
Interestingly, by the way, if you thought a sale was in the cards, the stock down apparently on this news this morning and put in the pre-market off close to 4%, not up. What does that say to you?
Oh, because investors know it's going to be a nightmare on Elm Street tonight in terms of earnings. And I think that's what you're seeing prepared in terms of cuts, guidance, obviously bad news. You hope for a sale. And obviously we talk about, I think that's, a significant potential opportunity here. But Foley, I mean, he's been the core DNA of Peloton. So him no longer as CEO, I mean, that sends an ominous sign to investors that we're really hoping he could turn this around.